Hello, everybody. Thanks so much for joining us. I'm Carl Frank. If we don't know each other, it's a pleasure to have you here. United Wealth Management is presenting our second presentation on artificial intelligence. I think you're really going to enjoy it. This one's from Sands Capital, one of our key investment managers at United Wealth Management. I think you're going to see the other gentleman on the screen, how smart they are. So if you're at home, we're going to ask you you're going to stay on mute. We won't see you. But if you want to ask questions, please do. So you'll use the chat button. That's at the bottom of the window. So on your Zoom bar there's some green buttons. And down near usually the middle, there's a chat button. And so just type in your questions there. Type them in anytime. Cassidy in the back of the room is coordinating those, and I'll be, coordinating the questions live with you and our speakers today. So it's really looking forward to it. Thank you for joining us. Again, do ask questions. That makes it more fun. Sometimes our best conversations are around. Well, I'm going to introduce one of the gentlemen you see on the screen, Dylan Broderick. He's a senior institutional development manager at Touchstone. Touchstone is the company that helps with Sands Capital. Dylan began his career at Touchstone in 2016 as a regional sales specialist. Dylan is responsible for the distribution of Touchstone funds to companies like us, pretty much, I think, from Cincinnati West. He's definitely the West Coast guy. Before joining Touchstone, he was a trader at Fidelity, and he got his BA at Indiana University in public affairs. So he's no slouch. He's used to presenting, and I think you're going to enjoy the way he starts our conversation off. So without further ado, Dylan, please help us out.
Yeah, thanks for the introduction, Carl. Great to be here. So I'm happy to introduce our main speaker, Dan Pilling from Sands Capital. So just to give you a background on Sands Capital. So Sands Capital is a boutique investment manager that solely focuses on long-term growth investing. They're based in Arlington, Virginia, and been managing money since 1992. And in total, they run 3 different strategies for us at Touchstone Investments. So Dan is a senior research analyst there at Sands, covering companies like NVIDIA, which I'm sure you've heard of in the news lately, and is an expert on artificial intelligence. So Dan joined Sands in 2018. Prior to that, he held several other analyst roles at various investment managers, and also earned his master's in finance at Cambridge University. So today, Dan's going to walk us through a few slides on AI and how that's driving the semiconductor demand. We're going to leave a few minutes here at the end for any questions that you may have. So with that, I'll pass it over to Dan to begin.
Yeah, thanks, Dylan, and it's great to be here. I mean, I was going to say, actually, so I think, so I have a few slides that we can go through, and I suppose this tends to be a topic that has a lot of questions, so we have plenty of time for questions, actually. I mean, but I can also just keep on talking, so whatever is better, but it's obviously great to be here, and so maybe I think what we'll do, so a big theme for us at Sands has been to take the AI topic and sort of reflect that in the semiconductor space, right? So we'll have a few slides on semis first, that goes into AI, and hopefully we can sort of have some Q&A afterwards if you guys like. So let me share my screen here. All right. Full screen mode. Okay. So I hope you guys can all see that. Please let me know if you don't. I'm going to skip all the Sands stuff. So maybe, I mean, I'll start off with sort of the semiconductor sort of industry. Yeah. So as you can see here, sort of this chart in high level shows the semi industry revenue over time, and it kind of goes in waves, but ultimately it tends to go up. Sort of a cyclical type of grower, I'd say. And as many of you probably know from your own personal lives, semis have benefited from PCs, the internet, from mobility, and now from AI, and is likely going to become a much bigger industry sort of in the future. Then I guess if you look at the semiconductor space in terms of earnings per share, over time, it may surprise you actually, but semis have been some of the fastest or best growers out of the entire sort of S&P 500. And EPS is up about 10 times, even more now since 2008. And with that, also stocks are about 10 times, or some even much more in that time period. So it's been a great space to invest. Here's a few companies, and I think they all will benefit significantly from AI. These happen to be the companies that we're invested in. I think the key point being is all of these companies are very dominant, right? So NVIDIA, for example, actually has close to 100% market share in terms of AI training, ASML is a monopoly in lithography. Taiwan Semi is sort of the leading foundry that manufactures all these AI chips. And then VAT, Valve, Lam Research are both also semi-capex companies. And again, they're both very dominant. Actually, we don't have this here on this slide, but Lam Research, for example, has 100% market share in something called high aspect ratio etching, which I realize sounds like a super random term, but actually that's required to manufacture all the memory that you see in AI chips today. Without Lam, none of this would be happening. And Entegris is a chemical company, and again, very high market share. So I think the conclusion is the semiconductor space is comprised of these very high market share businesses with very, very significant moats. And then maybe quickly, I wanted to note here an interesting thing that happens to semiconductors, but actually also ties into the AI theme. So as many of you may have heard, these chips are really expensive, the AI chips, but also actually the chips that go into your smartphones, yeah? So this chart here shows sort of the cost of a so-called leading edge chip over time. So 45 nanometer was about 10 years ago. 5 nanometer is actually also a little bit dated already. We have 3 nanometer now. The curve continues to go up like that. But the point being is all these chips are getting much, much, much more expensive. And we're seeing that also in the AI chips, which cost anywhere from 20 to 50 to $100,000. Now it's interesting though, like what happened at the same time as the cost went up, the number of chips being sold is going up. So this chart here shows sort of the ballpark, at least the number of silicon being sold in the world from 2008 to 2022. And as you can see, it sort of doubled over the time period, pretty much. So you have like this interesting thing where the cost of the chip is up 5x, but we're still selling more, which is very unique, right? Like usually in economics, and I studied economics at school, they always told me when the cost of something goes up, the volume of it goes down. So imagine, if the cost of your car doubles, you probably would not be buying a second car at least, or maybe a third, or whatever, how many cars you have. At least I wouldn't. But here, it strangely happened that despite the cost going up 5 times, we're selling way more chips. And the reason for that is actually the use case. And AI ultimately is the latest iteration of that use case explosion. And I'll get to that in a second. So the second part of this presentation runs through so I think hopefully we talk to the supply side a little bit in terms of chips. Just to repeat, it's been a great space to invest in. All these companies have very significant big moats and market shares. NVIDIA, close to 100% AI in AI training, for example. So the supply is very sort of constrained effectively in the hands of a few large companies. And then now we need to think about sort of the demand side of things. And AI is sort of the most important demand driver, but we'll try to put this a little bit into history. So I think all of you probably have an iPhone in your pockets. Some of you may not. Some of you have an Android phone, but the vast bulk of people in the US have an iPhone. And the reason for that is actually fairly straightforward in our opinion, yeah? So this chart here shows sort of the computing abilities of an iPhone over the past 10 years, 11 years. Yeah, and what you can see here is basically the iPhone has become 10 times better than 10 years ago. And if you wanted to visualize that, you'd say, well, okay, you could have a stack of 10 iPhones, old iPhones here, and that would equal the computing power of one new iPhone today. Now, the reason why I mention this is that like something pretty magical happened with this approach here, where the phone got better, but it also drove the Apple service revenue up by about 5 times in that time period, yeah? And the way that we like to talk about this is effectively, as the hardware got much better, Apple was able to entice more developers onto the platform, and they developed new, better apps, which weren't possible before, yeah? So 10 years ago, the biggest selling app on the iPhone was a ringtone. When we triple checked this. And today, obviously, you can do virtual reality if you want. You can play Pokemon, whatever you want to do. There's plenty of games. You can watch an HD quality movie on your phone. And that's why sort of Apple exploded effectively, right? So that's an interesting sort of historical perspective. In our view, AI is going to be actually quite similar to that, yeah? And the next chart here sort of at least tries to maybe explain this a little bit, yeah? So in this chart, we've attempted to show the installed computing capacity of all NVIDIA chips in the world. And obviously it's an estimate, right? And basically we're taking the revenues, we're taking the cost per chip, and we're taking what they've told us each chip can do in terms of computing power. Yeah? And the curve is obviously going tremendously up. Yeah, and then what that means to us is it's very similar actually to the iPhone, just much, 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 much more extreme, right? Just to remind everyone, so on the iPhone, it went up by 10 times. Here it's going up by something like 100 times or 70 times, very significant. Now, the thing that we've been told, or at least our research tells us, is that as you throw more computing power at these things, the outcomes get better. So the IQ effectively of these algorithms improves significantly the more computing you can throw at the problem. That's actually effectively what happened here. Yeah, as we went from 0 to 5, you had ChatGPT 4. ChatGPT 4 was only possible because you had these new AI chips from NVIDIA. That was the only reason why it was possible. But now imagine what happens from here to there. The algorithms will become much, 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 much better. And with that, we should have a use case explosion. And it should look not too dissimilar from this, right? So just like Apple had a use case explosion and the apps went from 0 to several millions, we should go here from a few hundred to a few million use cases for AI, based on the same logic. Yeah? And the reason why I present it this way is to say, this happened in history. It seems like the history is just repeating. It's just in a little slightly different form. But again, it's all about compute improvements. And when your compute improves, whatever the algorithm can do can get better. So hopefully this chart sort of shows that. And we've tried to show this here a little bit too. And I know this chart is a bit complicated, but what we're saying here is basically, as the hardware gets better on this curve, the precision, accuracy, and IQ of the algorithms gets better, which is this curve. And then we sort of have this use case explosion, which means, and at the top, I mean, and I'm sure there's going to be better use cases, but at the top we put self-driving vehicles, right? Because that's sort of the use case where you really need 99.99999% accuracy, because otherwise, people will get injured or even lose their lives. And I think the curve actually goes something like this, like it goes up exponentially over time, and we're probably somewhere down here. Maybe a few examples of use cases. So we go, me and a few of my colleagues, some of the PMs, we try to go to these AI conferences where we just see sort of use cases explained. Yeah. And maybe I wanted to briefly mention one or two. So we saw NASA give a talk about how they design their spacecrafts. And as you can imagine, I mean, NASA has been doing this for a long time and in a very successful manner. And usually it's people designing the spacecraft. And if any of you watch Star Trek or Star Wars or whatever, I'm sure you've noticed that a human spacecraft looks way different than a Star Trek spacecraft. And what was intriguing here, what NASA showed us, is that they used Gen AI to design these space parts that don't look like a human would have designed them. They're not geometrical, they more look like insects, insectoid forms. But it turns out the AI can do that 95% faster than a human. So instead of 2 weeks, it takes a few hours. And the part is double as good as a human part in terms of resilience, in terms of energy efficiency, et cetera, et cetera. So that's just one big use case. And obviously NASA is sort of the tip of the spear, right? Like a spacecraft is very expensive. So if NASA can design space parts, we can probably ultimately design pretty much everything with a Gen AI. Maybe the other example I wanted to show quickly is AstraZeneca. So they talked about having each and every one of us as a sort of digital copy, maybe in the cloud, maybe in the AstraZeneca cloud, I'm not sure. But then the idea is to say, if you have that, you can use your Gen AI equivalent to maybe try and test what sort of drugs would benefit you and how would your body react. Now, obviously, this is way, way, way far out, but the idea is intriguing. And I mean, presumably, all of us could have potentially better lives if we would know better how drugs can affect us if we have certain ailments. Anyways, this is all very early days, and I'm pretty sure in a year or 2 years, we'll have a much better sense what the real big use cases are. But the point is that it's not just ChatGPT. This is going everywhere. And every company in the world seems to be finding use cases that we don't hear on a day-to-day basis. Right, I tend to talk about the virtual reality stuff too. Maybe I'll just briefly mention this here. So we tested the metaverse product from Apple. It was pretty cool. It's pretty early stage. But I think there's a future to be had where Gen AI actually helps you to simulate the world around you, and actually helps you create content for this type of stuff as well. Now, obviously, it would be fantastic for semiconductors because the semiconductor content in these devices is enormous. So you probably drive a lot of growth again if this happens. And I'm pretty sure it will happen actually next 5 to 10 years, and we can debate. Right, so let me tie it all together, Alex. Sort of, I'll make this a little bit semiconductor specific because I'm sure you want to hear about stocks as well, and we can talk about any stock you like, really, that especially the ones we've invested in. But here's again that chart from the beginning that sort of shows the earnings per share of the industry. And so here is the part that the dark blue, sort of the part I showed in the front. Yeah? So basically, I mean, I know it's hard to see now, but the EPS goes up 10 times, and the stocks went up 10 times. Now, here's what happens if we assume a slight increase in growth and slight increase growth and continued margin expansion, just like it has in the past. So basically, in that scenario, the semiconductor industry sector would trade at about 5 times earnings here in 2032, which I realize is a few years out, but we're long-term investors. And it would probably be actually the outcome would be quite similar to the past 10 years. So if EPS goes up by 10 times, the sector probably goes up by 7 to 8 times as well, and maybe even more if you get some dividends back. And all of that is wedged into sort of this idea of these companies are very dominant, have 70, 80, 90% market shares. They are some of the key beneficiaries of all this AI stuff because we need chips to train the models. We need chips to run the models. It's called inference, right? Whether this is on your phone, on your PC, or on the cloud, there's going to be a lot of growth in semiconductor demand. So we feel pretty strongly about that. This is one of the key spaces that will benefit from sort of the rise of AI. And maybe one example I was going to give, and I tend to get a lot of questions on this company in particular. And for those of us who may have not heard of this company, this is a European company that we've been invested in for about 14 years now. And what they do is they provide a very large piece of equipment called a lithography machine. And a lithography machine helps you pattern helps you put the pattern of a chip on the silicon wafer. And it sounds quite niche, but these machines cost $200 million per machine for the future evolutions. They used to cost 45,000 in the 80s. And it became so complicated that only one company in the world can do it, which is ASML. So without ASML, we couldn't have this call. We wouldn't have iPhones. We wouldn't have PCs. None of the cool electronics that we have today. We actually would not have AI as well. And they're sort of effectively attacks on the industry. And what we're showing here is basically as the industry grows, their take rate goes up from 3 to 6.5%. Why? Because they're effectively a single source provider. And then with all this great AI stuff, they should really continue to grow from this too and benefit from it, right? So it's not just NVIDIA. That's all I was going to say for now. So I was curious whether there's any questions, or I can also maybe go a little bit deeper into some of the computing stuff in terms of, we have another chart that sort of maybe shows the ChatGPT evolution and how it looks like versus compute, for example. But anyways, I'll stop there and see whether there are any questions.
Dan, thank you so much. That was great. What an opportunity it seems we have in artificial intelligence. So I'm really curious, kind of at the highest level, those slides that you showed about the chip prices going up, and then the demand, it's just insatiable, right? That's continuing to grow. How long can that be, and how long will it be before other manufacturers come in and reduce the prices? I think I read that Google is manufacturing their own chips.
Yeah, I mean, thanks for the question. Now, I mean, maybe high level. So the prices of the chips, they're not going up because NVIDIA is, trying to be mean, but they're actually going up mainly due to the cost of manufacturing going up. So each time So Moore's law is still actually around. And for those of you who don't know, Moore's law is sort of this idea that within a certain amount of time, you have a doubling of transistors on the chip in the same sort of footprint. And there's actually two aspects to it, right? There's a doubling aspect to it. And then the idea is to say, actually, as you double, the cost per transistor halves, right? Because you just have more sort of double the number. So the doubling aspect is still true. The halving is not true, right? So the transistor cost is definitely not halving anymore. It's going down a little bit, but not that much. And that means if you go from 5 nanometer to 3 nanometer, the processing cost alone goes up by something like 20 to 30%. Now, what's happening with NVIDIA is actually it's not so they have to pay TSMC 20 to 30% more. But then also the second aspect that's happening is that the size of the chip is going up. And ultimately, this is like a little bit like a, I don't know, like a bakery, like if you buy 2 breads, you pay double, so basically you buy 2 chips and you put them together, you pay double, right? Because it's all silicon. And so their cost is going up too. Now, so the cost will always go up for NVIDIA, for Google, for all of them. Yeah, I mean, now I think you're right though to ask a question about the competitive angle here and threat, and so here's maybe an interesting way to think about it. Yeah, so for Google, I mean, Google has done phenomenally well, and for what is worth, we also investors in Google have been since I think since the IPO, so for a long time. And Google is the only hyperscaler that has a truly competitive AI chip. Nobody else has it, not AWS, not Microsoft, nobody. Google started this in 2016, and they use it for internal purposes mainly. So 99% of the use case is for their own internal use cases, right? So how do I accelerate, how do I infuse search with AI? They will use their own stuff. How do I get better on YouTube? I will use my own stuff. And then what happens is that effectively the problem then becomes is that they don't have the software to externalize it. Yeah. And when you want to externalize things, you need to have libraries, so-called SDKs, et cetera, to make it easy for external developers to use it. And that's what NVIDIA did, right? So maybe the example I tend to give. So the reason why we talk on Zoom today is not because Zoom is so much better. I mean, it's mainly because it's much easier. It just kind of works. So I can use it, you can use it. I don't have to be expert in like sound drivers and whatever. Yeah? Like and the same here. Yeah? If we want to use an AI chip, we can use NVIDIA because the entire software stack is there. It's just like there, you can done. I mean, maybe I can't use it and maybe we can't, but like the people, the software engineers can. Whereas if you want to use a TPU, you have to hire hundreds of people and they need to make it work for your use case. It's the same with all of them. Yeah, like sort of if you want to use the Tesla Dojo, for example, chip, AI chip, there's no way we can use it. We'd have to hire a team of highly specialized people that will make it work for us. And they're not available, right? So the crux is NVIDIA made it easy to use. They have the libraries, the SDK, the software. That's why the entire world of AI is being built on NVIDIA and not on the Google TPUs. And that's not going to change anytime, at least anytime soon, I think.
So you don't expect Google to be able to take over NVIDIA in that space, but with all of the changes in the software world, it seems like more and more people are just going to lean on companies like Google. Can you kind of, or maybe Microsoft or others, can you dive into that word you use there that I think some of our audience might really like to know what it means? The hyperscaler. What's a hyperscaler?
Oh yeah. Okay. I mean, so the crux of a hyperscaler is like this, and maybe I'll again use an example out of everyday life. So and this may surprise you, but actually Uber is a hyperscaler. They're just hyperscaling cars. So instead of with the car, the idea was to say, I have a car at home. I use it, I don't know, like for me, it's extremely low. I use it 2% of the time of the life of the car. So it's very low. If I can have somebody else drive that car in the meantime and earn a return, that's great. That's good for the world, right? Because fewer cars and whatever, right? So that's what Uber did. The hyperscaler is ultimately actually the same idea, because all the CPUs, all the computing stuff we have in our houses, half of the time you don't use them, right? So what they said is, okay, why don't I buy all these things? I put them into an enormous data center. I'm going to rent them out and they're going to be used 24/7. The ramification of that is as follows. I can give you cheaper prices than you can do yourself because you have to buy the entire thing and use it only a third of the time. And I actually can wrap a lot of software around it, which comes out of my margin, but ultimately you benefit, I benefit. So you have the bottom layer, the hardware layer, which is literally like Uber, you're just renting stuff out and making better use of it. And then on top of that, they built like a wrapper, so there's tons of stuff that AWS, Azure, etc. have done in terms of software to make all of this much easier. So ultimately, that's what a hyperscaler is, yeah. And as the game continues, the hyperscalers then figured out, okay, why don't I design my own chips? Why don't I create my own cooling? Why don't I just create my own data center design? Yeah. So that's sort of what that's how I would define it, at least.
That's a great point. Any questions from the audience? Nobody online yet? In the room? I've got a bunch. Yeah.
For the unfamiliar, maybe you can break down a little bit as far as what differentiates an AI chip from NVIDIA versus, we've all come to know Intel inside, in your computer. So what's the difference between an AI chip versus a non-AI chip? And sort of what are the barriers to entry as far as why can't everybody just jump into what NVIDIA is doing, to sort of, grab that part of the AI market?
Yeah.
Yeah, great, good.
I did. I'm sorry. I was trying to find a slide. Give me 1 second. Maybe it opens up. I have a great slide on this.
Good.
If it's hopefully, but maybe if I don't find it, I'll just talk you guys through. But I think we created like the slide on that a while. Oh, here we go. Let me just quickly share my screen. So just on the first way to address the question is I'll just quickly differentiate what Intel does and what NVIDIA does. Yeah, and hopefully this will work for you guys. I mean, okay, here we go. So hopefully you can see this. So basically, on the left side, this is what Intel is doing. And then on the right side, this is NVIDIA. Yeah? And I know maybe it looks a bit puzzling, but the idea is like this. Yeah. So in the 20s, we obviously had, Henry Ford came up with this idea of parallelizing the work process when you build a car, right? So to the left, this is like what Intel does. Yeah? So a CPU is something that does a workload in a sequential basis. So this gentleman here, he's an artisan, and he will build the entire car in the sequential process. Yeah, so that takes a long time. But that also means he's a master of all trades. He has a lot of work functions that he can do, right? This is exactly what a CPU is. A CPU can do many, many, many things, but it has to do it in a parallel manner. Yeah, like so it cannot do in a sequential manner. That takes a long time, obviously, right? Now then, Ford came up with this idea, and I know these pictures aren't great. Okay, we just use ChatGPT to do them, make them real quick out of it. So what Ford then said was like, why don't I take this and I compartmentalize it into the various parts? So one person does this wheel, one person does whatever, this light here, then the saddle here, and basically what we do is we parallelize the process, which means that every person here just has a tiny task, and it may not be as much fun as what this guy was doing here, but it's much faster. So the car price goes down, and it's a parallel process. This is exactly what a GPU does. So a GPU said, okay, we need so much compute to do certain things. Why don't we just make them in parallel instead of in a sequential manner? So basically, you can think of a CPU like having something like 1,000 brains, and a CPU has maybe 8. Now, the CPU brain can do way more things, whereas the GPU brain can just do a few things, but they can do it in parallel. That's the crux of the difference, and that's it, really. I mean, it's literally one is sequential, one is parallel. Yeah. Hold on, let me. Okay, I hope that's clear. Sorry, I'm just trying to find the button how to stop sharing. Here we go. Stop share. So hopefully that's clear, like the difference between the two. And then maybe if I do another step there, so then if you compare and contrast Intel and NVIDIA, so the magic of NVIDIA was to say, okay, if I want to parallelize things, I need a way of doing that. So imagine imagine you wanted to share your thoughts. Imagine you wanted to compute something in your brain, but instead of you doing it, you want to share it across 10 people. You can't do that. So you need something that says, okay, this is how we share the problem, and you do this, you do that, you do that, you do that. This is what's called CUDA, which is a tool that helps you to parallelize a problem. And this is super difficult, like genuinely very, very difficult. Yeah, like, and I can give examples on that too if you like. Yeah. Now Intel hadn't done that. Intel was an, x86 sort of sequential company, whereas these guys have done this and they've been doing this for 20 years. So that's the crux of the difference, and it also explains why Intel cannot just do this tomorrow anymore, because NVIDIA has been doing this CUDA software for 20 years. Nobody else has that. If you want to parallelize a problem, it's NVIDIA, right? So that's sort of the two differences, yeah. And again, I can go way more detail, but I'm sorry for babbling on here, but hopefully that explains it.
Not babbling on at all. I think CUDA, as I understand it, could be a way for NVIDIA to grow even beyond manufacturing. Is there talk of they could license that to other people?
Yeah, I think they will not do that. The reason being, well, I mean, it's one of their core competitive differences, and they're sort of the only game in town. And I think, maybe we see this in 20, 30 years or so, but not now. Yeah. Like, I think that there's no good, at least in my opinion, there's no good reason for them to do that yet. I think what they will do is, here's another interesting aspect to what NVIDIA has actually done now. Like, so we went to their developers conference or GDC 3 weeks ago in San Jose, and it was a cool event, right? Like, so the NVIDIA founder Jensen was on stage, and 20,000 people there. He was wearing his leather jacket. It was just really cool, and sort of they called it the Woodstock for nerds. It was kind of interesting, but like anyways, so he was he basically made a really interesting point. He was saying, okay, NVIDIA used to be a chip company, right? So I design a single chip. It has 100 billion transistors. It's super difficult to do. I do that. In the future, I'm not just a chip company anymore. I design the entire data center, which means you need the chip, the AI chip in the middle. You need the networking stuff, right? So to talk to other chips, you need the memory latched on top, but you also need all the analog parts, right? So whatever, transceivers, et cetera, et cetera. So I'm going to put that all together for you in a super optimized system, yeah? And again, if you look back at history, Apple did the same, right? They said, I'm going to have the phone, I'm going to do the software, and I'm going to optimize them so much that nobody else can compete with me. Same thing here. And just to give you a number, like, I mean, they talked about 600,000 parts in their latest sort of AI server, like 600,000 parts, right? So this, and the chip is chip is a big part of that, but there's like tons of other things they put together. So it's become a really complicated problem, yeah. So, and Intel, AMD, and all the other guys, they're just far away from that. I mean, it's just, yeah. I mean, it's not going to happen anytime soon until they catch up, in our opinion, at least.
Yeah, that's a huge competitive advantage. So the other companies you're invested in are not obviously the couple of companies that you just mentioned, and you mentioned ASML, who's in Europe. One of the things that is interesting and always been fascinating to me is how everything is globally sourced. Are there threats to that now? I mean, the world right now is not the same place it was a decade ago.
Yeah, no, that's true. So maybe here's how we think about it high level, yeah. So and this may sound a little bit extreme, but I believe in this. So I think China is out of the race. Why? Because they just don't get access to AI chips. And then that one chart I showed with the computing installed base and what happens. So they're not in that race. So that's the problem, because once these algorithms will get that good, you're going to use them to design new things, right? Like maybe that leads to quantum computing, but whatever it might lead to, yeah. Like, but so they're out of that race because of export restrictions, et cetera, et cetera. Yeah? So then if you look at the supply chain today, it's the weak spot is obviously Taiwan, and when we can get to that too. But then I would say in terms of the vast, I mean, probably everything actually of the supply chain above and beyond Taiwan is in the US, it's in Europe, and it's in Japan, which presumably sort of works, right? Like from like there's limited risk to that, hopefully. But then and the Taiwan piece, so we've done a lot of work on this too, and obviously you never know, right? Like, I mean, dictators and stuff, like who knows what's going to happen? But I mean, in our opinion, the logic is like this. So one little known fact is like this. I mean, so if China were to take over Taiwan tomorrow, the Taiwan semi fabs would work for another 2 weeks, and then they would stop working. Why? Because you need all the spare parts from the US and Europe and Japan. You need chemicals, spare parts from ASML, Lam Research, etc., etc. So it literally would stop working. So you get nothing. So you're definitely not getting leading edge chips if you go to Taiwan. What you do get is, though, a very, very even more draconian export restriction on any leading edge chips. Yeah, I mean, and sort of, I guess, sort of Russia is going through that right now, right? It's very painful for a country because, we kind of want to evolve, I guess, into the future and on the back. And that would be hard. Yeah. So for China, the motivation, I'm not sure that there's that much of an incentive to do that. Now, maybe I'll say one last thing around this. Yeah. So for us, so we are invested in Taiwan Semi too, but I think the way we thought about it is we're a little bit more exposed to also the so-called semi-capex names, so the ASMLs of the world. Because imagine if Taiwan, so if that happens, Taiwan Semi has invested hundreds of billions of dollars, and that will all be gone. So you'd have to rebuild elsewhere in the world, which is happening now, right? So there's big stuff in Arizona. If you wanna buy real estate, probably go to Arizona. It's probably pretty good. Like that's gonna be a good place, I guess. But basically you'd have to replicate all of that from Taiwan in the US and Japan and Europe, mainly in the US actually, because the big leading edge customers are the US. So for the semi-capex companies, it will probably mean like years and years and years of supply of massive demand. Yeah. So actually, strangely, I think at least our portfolio on average will be quite okay. I think now obviously we don't want this to happen, it will be disaster. But anyways, that's sort of how one may think of it. Yeah. And ultimately I said, like, I think the Western countries are really the winners here, because sort of these companies, they just don't exist in China, and there's nothing like it in China. I mean, and there won't be, at least in my opinion. Yeah. And we can debate on that too, by the way, but
Yeah. Dan, that's very optimistic. I love it. Thank you for that. It seems very realpolitik seems very likely outcome, tit for tat type of a situation. Any other questions from our audience here? I have just one final one for you, Dan, if we don't have any from our chat. Nobody yet. How is your company using it? And it might be a question for the other gentleman on the call too, from because you're in SANS, but what it maybe touched on as well. How are you changing the way you do work? We were joking before the presentation started today. We had a conversation. One of our guests described how he's using AI on Facebook. It's amazing, right? How is your company changing the way you're doing
yeah.
it?
I mean, so it's still early days for us too. So what we've done so far, so we've taken sort of ChatGPT and made it. We use something like that to train our own, use our own data. So we have probably 20 years, definitely not 30. I mean, we've been around for 30, but we don't have the first 10 years, I think, in digital form necessarily. But we'll have the past 20, and we try to use that to train our own sort of GPT, and then we can ask it questions, right? So for example, you can be like, okay, like what happened to ASML 5 years ago? What did you, Daniel, think, and what did actually happen? And this is all cool, right? I mean, it's not bad. I don't think it's as evolutionary as one might want it to be. Now, I think in the future, and I just talk completely my own view on this, yeah. So and we're trying, we're still experimenting with all this, but I think one of the biggest pitfalls as an investor is to get sucked into the narrative of the day, right? Rather than looking out long term. I think that might be interesting. Sort of a co-pilot that tells you actually every time this type of news comes up, it doesn't matter. Because most of the time it doesn't matter. Like you asked me about and I mean this in a humble and nice manner. Yeah? There's always a new chip coming out, and NVIDIA is still it's incredible. Like it's still the third biggest company in the world. And I remember to the day, I was in the gym in 2016 when the first Google TPU came out, and the entire office ran to their desks like, oh my God, oh my God. Same here. I thought like this is bad, right? But lo and behold, it didn't matter. So I think that would be interesting. And then I think thirdly, at some point, we're probably going to have some sort of tool that helps you build the models, because again, like that's pretty simple stuff, I think, yeah, that we can probably replicate. Now, hopefully what we do is we try to see 5 years out. So at least I tell myself maybe that's not going to be sort of an AI thing anytime soon. I hope so at least, but maybe even that will go. I don't know. But ultimately, hopefully it's a tool to make us all better, not take opportunity away from humans.
Those are great stories. I love that. It seems very practical way to do it too. I think we could all use the companion that says ignore this news, ignore that news. I don't think anybody is inundated with stuff that we actually need to see. We have to look for the stuff that's really.
I just see that was a question from Bob on how are we investing in AI technologies. I can answer that too.
Yeah, please. That's great.
And just to be clear, Bob, I interpret this question as to how does one invest in AI in public markets? Please let me know if that's incorrect. Yeah, but it sounds like that's maybe and so we perfect. So SANS, I'll talk about our way of doing that. I'm sure there's other ways of doing that too, but our way is basically, so we have a framework to look at new technologies, right? And there's sort of like these curves out. So then you say, so for AI, for example, you could say, and it's actually been similar for other paradigms too. You look first at the hardware, so you need some sort of hardware build out, right? Which we're in that phase right now. You need AI chips, you need networking, you need inference chips, you need AI smartphones, AI PCs, whatever it might be. And in previous paradigms, it was similar, right? Like in the PC paradigm, you had to first build out the PCs. And then the second step is the software, right? Like, so again, in the PC world, you had Windows and whatnot, and Office and a bunch of software companies. Similarly here, I think the next, and pretty big investors in Microsoft for that reason, for example, there's going to be a select few software companies that are going to really benefit from this. I think it's not, so I would actually argue it's slightly easier to find the winners in hardware than in software. But within the software world, I think what you want to look at is size. Like how big is a company? Training these AI models is very expensive. And secondly, how dominant is the company, right? So obviously Microsoft, fantastic. They have hundreds of millions of users using Office. So if you want to use Office and AI, you're going to have to go to Microsoft. There's no competition. So that's a pretty nice way of thinking about it, right? So they have the size and they have the install base with very low competition. That software business is really going to benefit. Maybe also sort of in that similar layer, actually maybe one below that is the hyperscalers, right? So they're going to buy all the chips and sell them to you, the AWSs of the world, Azure, et cetera, et cetera. And then lastly, and frankly, I can't give you numbers on that, but I think at least I'm personally and many at SANS were very excited about that. So I think leading companies will benefit hugely in every space. Yeah. And I'll tell you why. Yeah. So this stuff is expensive. So you need a lot of capital to build these AI models. And then secondly, once you build them and you have a leading market share in an industry, you can probably keep some of the benefits. The best example, yeah, like, and really, I think it's super interesting. Yeah, like what happened with Meta, like 2 years ago, Meta was in a really bad spot. Then they used AI, which improved the ad targeting, and the stock added $1 trillion of market cap, right? Like $1 trillion, which is incredible. So, and why was that possible? Because they had the scale, and they had the dominant market share, so they were able to price it. If you had 5 other Metas there right now, the outcome would not have been like that. I can make a similar argument for you in the next 5 years about maybe Visa, right? I mean, I'm just totally making this up, right? Like Visa, there's a two-player industry. Maybe they're gonna have cost efficiencies because of AI. They're really gonna benefit. I can make a similar argument on companies, on chemical companies. So we own a company called Sika, construction chemicals. Construction chemicals is probably going to be revolutionized by Gen AI because the chemicals will get much, 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 much better. So, right, and we can debate on that too. But again, it's a dominant company. They're probably the biggest in that. They are the biggest in that space, which means they can do it. They will reap the benefits. And I think you can go through industry and industry like that and really find big winners that are maybe not found today. It's not priced in today. And so there's a big opportunity for active fund management in that sense for those. But who precisely they are today, I don't know either. But I'm pretty positive that we have some of them because rather selfishly, I suppose, that's what we do. We invest in leaders. So hopefully that'll benefit us.
Yeah, Dan, those are great examples. Things you never think about. Chemical company of all places.
Yeah.
So Bob, I hope that answers your question. I don't know if you've typed anything else there, but we'd be happy to take that offline and answer any personal questions too if anybody else has brought up if you'd like to know more. Well, gentlemen, thank you so much. Dan, in particular, you did great. We'll give you a real round of applause.
Thank you so much.
Everybody online is applauding too, I'm sure. This was really, really, really great to see you. Thank you so much.
Same here. Thanks so much for having us, and I really enjoyed the conversation.
Great. We'll see you again.
Bye.